Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. China optimism. Shares gain in Asia ahead of a briefing on Beijing's plans for more stimulus. Retail sales and industrial output both come in ahead of estimates. The U.S. says strikes on Yemen's Houthi militants will be unrelenting until the group stops attacks in the Red Sea. We'll bring you all the latest from the region. Plus, President Trump is set to speak with Russia's Vladimir Putin this week. The U.S. Special Envoy says the president expects some sort of a deal in the coming weeks. Well, good morning again, everybody. It's just gone 8 a.m. across the Emirates. I'm Joanna Bersace in Dubai, getting you up to speed on this Monday morning, keeping a close eye on geopolitical developments over here in the region with the resumption of those Houthi attacks. Strong worded response from the Trump administration. We will talk about that. And of course, one eye on that potential phone call that might take place between President Trump and President Putin. But for markets, we actually got a better close for Wall Street on Friday. The S&P up more than 2%. Actually, its best day since November. For the week, though, as a whole, remember last week we were talking about the fact that the S&P is in correction territory, i.e. 10% away from its peak. Still a negative week, a tracking negative week for Wall Street. Today, futures leaning towards the red as well, down about 0.5%. A major week coming up. Don't forget, FOMC is on Wednesday. Nobody's expecting the Fed to cut interest rates at this meeting, but we'll be keeping a close eye on those interest rate projections, the SEP dots, as they're known. So will they become a little bit more dovish in terms of what they're guiding to the market, or will they stay cautious in light of all of the uncertainty around the data? So big question for investors this week coming up. Gold, we have pulled back from $3,000, but we did get there on Friday, an all-time record high, and obviously an important psychological level as well. Gold up 14% year to date on geopolitical concerns and the pullback that we've seen in the USD. All of that has been aiding the safe haven. And then Brent, once again in focus. Now we are above $71, so about 0.7% weaker. Of course, the theme there has been downward pressure on back of fundamentals. But two things aiding oil this morning. Number one, those Houthi attacks. So again, attacks on the shipping lane has been factored into some of the geopolitical premium that's priced into the energy complex. And number two, some slightly better data out of China. I'll get to that in a moment. And then Euro also in focus as well. I haven't even talked about this yet, but a big development in Germany on Friday. The CDU party, led by the most likely to be incoming Chancellor Friedrich Merz, did come to an agreement with the opposition party, with the other potential party in the coalition, the Greens, vis-a-vis a huge infrastructure spending package. We're talking about 500 billion euros worth. On the back of that, we saw a sell-off in bunds and further boost for the euro currency, trading just shy of 109. But let's get to today's China data, because we did get actually a slew of beats coming through. This is just a quick summary of what we got. But IP better than expectations, retail sales also better than expectations, fixed asset investment also beating to the upside as well, and tells you that at least out from the consumption angle, and this is a big focus for Chinese authorities, the numbers are actually coming in better than expectations. So let's wrap this all together into how some of these Asian markets are faring. Avril, just walk us through the reaction this morning and how some of these markets are reacting to the data that we got from China.
Yeah, while we saw beats on those three fronts, keep in mind also that this is data in the rear view mirror, so to speak. And there was also a jobless rate that ran at the highest in 2 years, along with data which showed home prices extending their decline. So perhaps unsurprising that investors are perhaps taking a bit of a wait-and-see approach as we wait out for a big briefing later this afternoon. We see into the lunch break, Chinese tech stocks looking quite flat, as were the performances on the mainland. And on the Hang Seng, this was being fueled by finance-related names. And note as well that after the data, even though we saw stocks kind of extending declines, they quite quickly paired that, and there was a similar erasure of gains on the Chinese renminbi. So a bit of mixed performance as far as reaction to the data is concerned. Keep in mind as well that when we we look at these gains on the region's benchmark, some of it is the optimism of that China's briefing and stimulus hopes, but also tracking the rebound that we saw in the U.S. Late last week.
Avril, thank you so much. And while you were speaking, we just got some breaking news come in. I did say that we were keeping a close eye on geopolitical developments. But this out of the White House now, out of Trump, he says that he will be speaking with Putin on Tuesday and that the subject, the focus of these talks will be around land and power plants. So remember, the Middle East envoy, Steve Witkoff, did actually travel to Moscow towards the end of last week. He held discussions with the Russian delegation and with President Putin. And on the back of that, he did say that this call was likely to take place. We now have confirmation that Trump will be speaking to President Putin tomorrow. That is on Tuesday. Some further commentary also coming through from Trump, unrelated to the call with Putin. He's saying that reciprocal and sectoral tariffs are coming in on April the 2nd. We know that that's going to be a big date for tariffs as well. No plan to have exemptions on steel, aluminium tariffs. But when it comes to Russia and Ukraine, we know that the focus of these discussions are going to be around land and power plants and talking about dividing assets between Russia and Ukraine. So we will circle back to this topic in a short while on the show, but we do know now that this phone call will be taking place. All right, let's get back to the data that dropped from China this morning. Bright spots all around in China's latest economic data that was released earlier. Bloomberg's China correspondent Min Lo joins us from Hong Kong. Min, good to have you with us on the show. I think there was a lot of expectations into these numbers as to whether or not they would beat versus expectations, particularly because they pertain to the consumption part of the economy. What did we learn this morning?
Yes, we're getting just a very first snapshot of how the economy is doing this year, and a pretty solid start to the year because we got robust numbers on most fronts, a big beat when it comes to industrial production coming in at 5.9% versus estimates of 5.3%, suggesting that these industrial activity are still pretty robust even amid these tariff risks. And as you said, investors zeroing in on that beat in retail sales coming in at 4% versus expectations of 3.8%. Again, that pickup there likely to offset some of the impact of tariffs. You look at fixed asset investment coming in at 4.1%, likely because of government-led expenditure doing the heavy lifting there. But a bit of disappointment filtering through in the last two metrics there on the screen. The property investment still down by 10%. Surveyed jobless rate at 5.4%, which is the highest since February of 2023. And again, if you look at the longer-term outlook for the economy, you really need those last two indicators to pick up because that is what will restore confidence in people's prospect of their future income and their ability to spend in the economy going forward.
Yeah, so property and unemployment still relative negative spots in the Chinese economy. We do have a press briefing later this afternoon, 3 p.m. Beijing time. Walk us through the expectations of what we can expect to see out of that press briefing.
Yeah, so it is a combined presser, and there will be representatives from the Ministry of Finance, the Ministry of Commerce, the Central Bank, and the NDRC, which is the economic planner of the country. So it's likely going to be a whole-of-government approach to boost domestic consumption. And over the weekend, the State Council had unveiled that action plan, a pretty wide-ranging one, including measures to encourage this reasonable growth in people's income, a mechanism to adjust the minimum wage, also measures to boost investments that would in turn support consumption, for example, by holding these promotional events to encourage snow and ice tourism festivals, extending visa-free policies to other countries to encourage inbound consumption. There are also measures related to people's livelihoods and social welfare, for example, by raising the pension, providing subsidies for childcare, providing incentives for childbirth, and also, importantly, stabilization of both the stock market and the property market, because again, these two are important channels through which Chinese people accumulate their wealth. So it's a very holistic, whole-of-government approach that goes beyond what we have heard last year, the focus on that equipment upgrading. And I think this is what is getting investors to have a little bit more conviction over China's trajectory and its recovery in consumption this year.
Yeah, Min, well, we'll watch out for what comes out of that press briefing later today. Bloomberg's China correspondent, Min Lo, thank you so much. Now, those pledges from Beijing to take more steps to spur consumption are driving gains in the Asian session. Joining us now is Ben Powell, BlackRock Investment Institute's Chief APAC and Middle East Investment Strategist. Good to have you with us on the show this morning. Maybe let's just start with the data drop out of China. On the surface, the numbers perhaps better than expectations, but Min, our colleague our China correspondent, was just telling us that under the hood, there's still some persistent weakness in the property space, the unemployment rate coming in higher than expectations. What is your read on how the Chinese economy is doing right now?
It's doing okay, I would say, as well as the kind of property travails, which absolutely are continuing and continue to weigh on consumer sentiment. You've also got the ongoing issue of an imbalance between, I guess, the supply side of the economy, manufacturing doing really well, relatively really well, so more and more stuff, but relatively little demand. So what that's leading to is disinflation, even outright deflation. So it's doing okay in the aggregate, but the problem continues to be the demand side, the consumption side, and I think that's why we're seeing increasing steps and press conferences from authorities to try and stimulate a little bit of confidence from the Chinese consumer to actually get out there and spend some money, because that's what's not happening at the moment.
Yeah, if you look at Chinese stock market performance versus U.S. stock market performance this year, there's a marked outperformance. Granted, it's still only March, but we're talking about something like 15-plus outperformance in Chinese equities. How do you think that looks at the end of 2025?
So we at the BlackRock Investment Institute are overweight Chinese equities, so we're bullish, I guess. To think about the last few weeks, we've got to remember the starting point. Valuations were very, very low. Sentiment at maybe all-time lows because kind of everyone was bearish, both global investors and local investors for very different reasons. It seems like we've had an excitement, particularly around the AI space. So just a few weeks ago, there was a sort of view that AI is a uniquely American phenomenon, and that seems to not be true. So there are different players in the market, but China is definitely in the game vis-a-vis the DeepSeek moment, and I feel like that momentum can continue. Still feels like there's a lot of bearishness out there, but there are some good companies in China who are approximately, maybe not at the total cutting edge, but close to the cutting edge of the world's maybe most exciting theme at the moment, and they should be valued accordingly, I guess.
Yeah, there could also be an Ernie moment. We're speaking to our Bloomberg intelligence analyst later on the show about Baidu's generative AI model. That one's called Ernie. Let me bring it back to the tariff discussion. I think it's fair to say that what we're getting in terms of tariffs and tariffs implementation is worse than what market participants thought was going to happen this year, right? That the average tariff rate applied on universal goods is a much higher level than anyone thought it was going to be. How does that affect your calculus about the direction of travel for the U.S. economy?
So I'd say a couple of things. Firstly, I would say we're certain about the uncertainty. So I think all of us probably came into the new Trump administration thinking it's going to be a kind of higher velocity world in terms of news flow. But in all honesty, I think all of us have been surprised to the pace and kind of volte-face that we're seeing kind of almost day by day, tweet by tweet. So it's hard to keep up. So exactly how the tariffs are going to look, honestly, we don't know. I think we should all be appropriately humble about that. And that's reflected in the uncertainty premium, which is a real thing. So uncertainty, there is a concern that could start to feed through into consumer confidence and into corporate capex as people spending money kind of reflect their lack of confidence in the future by waiting and seeing and reining in those spending kind of decisions. For now, the U.S. economy is approximately okay. I would describe it not great, but a long way from a recession as we sit here today. But that confidence issue is critical. I'm sure the Fed will be watching that very closely, and we at BlackRock are definitely as well.
Okay, so there's something I'm trying to square my head around. The market is now pricing in 3 rate cuts out of the Fed for this year. But at the same time, many analysts, and probably BlackRock the same, have upgraded your view for where inflation is going to end up. How are the Fed going to justify cutting 3 times if inflation is close to 3%?
We don't think they can. So, I mean, we've had a view for 3 or 4 years that inflation is going to be more of a problem than the market's thinking. And depending on current market pricing, that view goes from being sort of wildly out of consensus to much more mainstream. It's back to being a little bit more out of consensus at the moment. And our view is that, yes, we might see a growth hiccup. Let's see. But the problem is that the Fed has, and this just seems obvious to some degree, is inflation is much higher today than it has been over the last 15 or 20 years. So before, they were kind of unconstrained. At the first sign of any trouble, they could come in and save the day, central bankers playing the role of kind of superhero. They're now, they are equally brilliant as they were before, but the world has changed, and they're now constrained by the other side of the mandate. And I think what the Fed's going to signal probably later this week is, again, this kind of humility as to it's a very confusing world, and they're probably going to continue to wait and see. I would really be surprised if we see a kind of very aggressive dovish pivot. We don't think you're going to see that for 100 reasons, but the punchline is because inflation's still much too high.
So maybe a hawkish surprise this week.
Let's see. But yeah, we think the room for cutting is less than the market is currently implying.
Yeah. Ben, always good to chat to you. Thanks so much for starting off the week with us. Ben Powell, BlackRock Investment Institute's Chief APAC and Middle East Investment Strategist. Now, still ahead, why are crypto companies flocking to Abu Dhabi? We ask Ola Doudin of BitOasis. But up next, the U.S. has warned of, quote, unrelenting strikes against the Houthis, who have vowed to continue retaliation in the Red Sea. Details coming up. This is Bloomberg. Iran-backed Houthi rebels have claimed responsibility for a second attack on U.S. warships in the Red Sea. The group says this is in response to U.S. airstrikes in Yemen and have vowed to continue the maritime operations until the Gaza blockade is lifted. Meanwhile, the U.S. has warned of, quote, unrelenting strikes until the group stops shooting at civilian and military vessels in the Red Sea. Now, joining us now is Stuart Livingston-Wallace, Bloomberg's executive editor for Middle East, North Africa, and Russia. Walk us through what's been happening in the Red Sea, because it feels as though things are really beginning to flare up again. Strong words from both the Houthis and the Trump administration.
Yeah, but I think you have to look behind the rhetoric. So in terms of how effective this can be, in terms of the attacks in Yemen, yeah, they can take out some missile sites, they can probably take out some silos, they can maybe even take out some of the Houthi leadership, but fundamentally they're not going to win that war on the ground because it is more or less impossible to dislodge them. And they're not going to put boots on the ground, I think, at this stage. So really the subtext here is a message to Iran. Stop supplying the Houthis with those advanced military equipment that allows them then to attack these ships at sea. Because, again, you can build drones and they can do a certain amount of damage, but in terms of the cruise missiles, in terms of the advanced weaponry, that's all coming from Iran.
Doesn't the fate of what happens with Houthis very much hinge on the fate of the discussions right now in between Israel and Hamas vis-a-vis the ceasefire, the extension of the ceasefire, the release of hostages, and so forth? Because Houthis started these attacks in solidarity with the Palestinian cause after October 7th. So if there is going to be a de-escalation, it seems as though the release valve will have to come from there.
No, and I don't agree with that. I mean, I agree that the rhetoric was around, yeah, we're in support of Gaza, and I think the reality is that the Houthis have suddenly gone from being this completely obscure group that no one knew about to suddenly having worldwide attention, and no doubt they quite enjoy the limelight. So, yes, they have always linked it to what's happening in Gaza, but I think the reality is they're their own operation, and to some extent they're getting, or their actions are being dictated by what Iran is prepared to provide them.
Yeah, interesting. And you are seeing the reaction in oil today. It's getting a bit of a bid on back of those tensions once again in the Red Sea. Stuart Livingston-Wallace, Bloomberg's executive editor for Middle East, North Africa, and Russia. Thank you. Now, coming up, President Trump confirms plans to speak with Vladimir Putin tomorrow. That is on Tuesday. All the details next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Joanna Bersecci in Dubai. Turning to geopolitics, and President Donald Trump has confirmed he will speak with Russian leader Vladimir Putin on Tuesday. It is expected the U.S. will push for a quick ceasefire to end the war in Ukraine. The planned conversation comes after a meeting between U.S. Special Envoy Steve Witkoff and Putin last week in Moscow. Bloomberg's Bill Ferries joins us for more. So we now have a date. So we know that this phone call is actually going to take place between President Trump and President Putin. Trump has said that they will be talking about dividing assets between Russia and Ukraine. What can we expect to be discussed on this phone call?
Well, we know that the talks that were held earlier between Trump's envoy to the conflict, Steve Witkoff, and Vladimir Putin did not result in Putin agreeing to a quick ceasefire, saying that there are still some issues that needed to be resolved. I think those are going to be the kind of things that come up in this conversation. It could be talks about when a ceasefire might begin, where troops may be based, what the terms of that ceasefire will be. We really don't have those kind of details yet. It's something, obviously, Ukraine will be watching with intense concern, as well as a lot of Ukraine's European allies.
What leverage does the U.S. have right now on Russia? What could President Trump go to President Putin with in order to force his hand to the negotiating table?
Well, there's still the threat of, and we've heard President Trump say this, that the U.S. could put additional sanctions or go more directly after the revenue stream that Russia continues to get from its oil sales. That's also the leverage or the incentive, I guess, that Trump has to get Putin to the table, is to say, listen, if we can get an agreement quickly, we can start to talk about easing up on some of the more severe diplomatic measures, some of the more severe economic sanctions. But the U.S. could go after some of those Russian dark fleet ships that continue to supply India and China. It does have that ability. It's just a big question of whether Trump would go that far to get Putin to the table.
Yeah, meanwhile, the Ukrainians' European allies are still holding conversations vis-a-vis what they plan to offer in terms of security guarantees and further military support to Ukraine. The idea of France and UK sending peacekeeping troops to Ukraine is still very much on the table. But of course, President Putin has said that that is a red line. How likely is it in reality that the European allies will be successful in providing these extra security guarantees to Ukraine?
Well, those are the kind of guarantees that Ukraine would really like to see, but there's a big question about how quickly the UK, France, and other nations could really assemble this force, and where would they be based. The talk now is about potentially 10,000 troops going in, but the European allies want that to take place with a guarantee that the U.S. would continue to provide some air cover, some intelligence information, and other things. And it's just not clear that the U.S. is ready to take that step. The security guarantee that Kyiv and the broader Europe want from the U.S., that's been a real sticking point throughout all of these talks since President Trump took office on January 20th.
Yeah, well, let's see what comes out of that call tomorrow when it does happen. Bloomberg's Bill Ferry's in Singapore. Thank you so much. Now, Syria's military fired rockets and shells at Lebanon yesterday after accusing Iran-backed Hezbollah of executing 3 Syrian army personnel, sparking unusual tensions between the two neighbors. Syrian state-run news agency says the militant group abducted the army personnel in an ambush on the border west of Homs, and what the Syrian Defense Ministry called a dangerous escalation. Hezbollah denies it was involved. And coming up on the show, a potential $10 billion energy deal. We get the details of a possible agreement between ADNOC and Mubadala. Next, this is Bloomberg. Good morning. This is Horizons Middle East and Africa. Our top stories this morning. China optimism. Shares gain in Asia ahead of a briefing on Beijing's plans for more stimulus. Retail sales and industrial output both came in ahead of estimates. The U.S. says strikes on Yemen's Houthi militants will be unrelenting until the group stops attacks in the Red Sea. We'll bring you all the latest from the region. Plus, President Trump says he'll speak with Russia's Vladimir Putin tomorrow. The U.S. Special Envoy says the president expects some sort of a deal in the coming weeks. Well, it's just gone 8:30 a.m. across the Emirates. I'm Joanna Versace in Dubai. It's shaping up to be yet another busy week geopolitically, with that call as scheduled to take place between President Putin and President Trump tomorrow. So we'll see what comes out of that vis-a-vis the potential for Russia signing on to this truce deal. But in addition to that, in the region, we've been talking about, once again, the flaring up of conflict on the Red Sea with the Houthi attacks and strong words back from the Trump administration. So that is giving a bit of a lift to the energy sector this morning. And then, of course, markets, all the price action last week. We've got the Fed coming up this week. All eyes on the language out of the Fed and whether or not they'll guide to perhaps more cautiousness with interest rate cuts, I should say. There are about 3 of them priced in this year, or lean into the dovishness that is priced into the market right now. But this morning, we've got futures leaning towards the red, down about 0.6%. Gold also pulling back from that all-time record high of $3,000 that was reached on Friday afternoon, but still very close to those levels. And the safe haven is up about 14% year to date as money poured in on back of the pullback in the USD and on those geopolitical concerns. Brent also, I just spoke about this, geopolitical premium being factored in this morning, up 0.7%, in addition to some slightly better data coming through from China that we will talk about in a moment. And then the euro in focus as well. We saw a bit of a jump on Friday after news came through that the CDU in Germany had come to an agreement with the Greens Party vis-a-vis that huge infrastructure package, 500 billion euros to be spent over the next decade. So that has been a big impetus for European markets this year. 10-year bund yields were up about 8 basis points. The currency also getting a bit of a lift as well. But it's not just these markets. I also want to draw your attention to the Bank of Japan as well. They also have their interest rate meeting later this week. And this is what investors are pricing in vis-a-vis the meeting this week. And nobody is expecting them to go for an interest rate hike. But both the wage and the CPI data have come in on the strong side. And it's around this time of the year that you have those wage negotiations. They've come in slightly hot, which actually lowers the bar for the Bank of Japan Governor Ueda to start preparing the market for further interest rate hikes. Now, there's not much of an interest rate hike priced in for the May meeting. This is why this upcoming meeting could be an interesting one, because he may actually insinuate that the hike could be coming sooner rather than later. So keep an eye out for that. Anyone who trades the yen or the Nikkei, it's going to be a big week from a communication standpoint. All right, speaking of Asian markets, though, let's continue the conversation with Avril Hong in our Singapore studio. And Avril, just walk us through the reaction in these Asian markets to the China data drop this morning.
Yeah, we saw a beat in terms of retail sales, output, fixed asset investment. But if you look at the jobless rate, highest in 2 years, along with home prices, which extended a decline, it just highlights that the Chinese economy is one that is still in need of stimulus. So traders are focusing on their consumption briefing a couple hours from now. And aside from perhaps this being the next leg, a driver for Chinese stocks, I'd also just highlight what we're seeing in the RMB, because after the data, we saw it erase gains, and this is despite the PBOC setting the dollar-yuan fix at the lowest level since November. So perhaps signaling some comfort in letting the renminbi enjoy the dollar weakness. Flip the board and just highlighting as well when it comes to the Chinese stock performance. If you're looking at it versus the S&P 500 is actually the biggest outperformance since the year 2007. And, you know, this is interesting because we had the likes of Franklin Templeton Investment or Institute, I should say, flagging the so-called C-put, wherein the Chinese president might seize the opportunity to come through with market-friendly measures at a time when U.S. stocks are languishing, and all this as part of efforts to kind of meet a 5% growth target for the year. So just highlighting that as well.
Yeah, interesting. I actually put that question to our guest earlier on the show from BlackRock, and he says that their house view is that we will continue to get an outperformance of Chinese equities versus U.S. equities. So it may not just be for the quarter. Avril Hong in Singapore, thank you so much. Now, Bloomberg has learned that ADNOC is mulling buying energy assets from sovereign wealth fund Mubadala. Talks stalled last year over valuation disagreements, but are expected to resume soon after Ramadan ends. The potential deal is worth around $10 billion and would give the UAE's state oil company ownership of assets in Southeast Asia and the Middle East. For more, Anthony DePaul, our Middle East energy markets reporter, joins us now. So the talks between Mubadala and ADNOC have been going on for a while. What is at stake? Well, what are the assets that are under discussion?
Yeah, Mubadala has this division called Mubadala Energy, which owns some natural gas production in countries like Thailand. They've got some other things in Southeast Asia as well. They So they operate as a producer of gas, and gas is an area that ADNOC is really interested in getting into internationally. So that's quite attractive for ADNOC. And we're also seeing a general reordering and a general shift of assets in Abu Dhabi as each of the different pillars really try to focus on something specific. So we've got ADNOC working really on all the energy assets, Mubadala moving more into finance, things like healthcare. They've got some industrials as well. And we've got kind of the ADQ, IHC type companies that are working on that kind of AI and technology area. So we've got those kind of three pillars. And so we're seeing that kind of reordering of assets within Abu Dhabi so they focus on each of those specific areas.
And sort of a streamlining of priorities per each one of these institutions. Let me just bring it back to the state of discussions. Why has it been, I don't want to say taking so long, but these discussions have been going for a while. What have been the sticking points?
Yeah, well, timing is an issue, of course, when we're talking about these big deals, particularly in ADNOC. I mean, we've seen a few deals agreed on in the last months by ADNOC that have taken, kind of a long time to bring on. And these are big kind of cross-border deals. We saw ADNOC last year agree to a roughly $13 billion acquisition of Covestro. That was, about a year plus in the making. Again, over a year discussion that they had with the Austrian refiner OMV about merging two petrochemical companies. So these things are taking a long time, but those are complex deals. Here in this one, we've got two Abu Dhabi entities talking about some international assets. And as you said, the valuation was around $10 billion, but they couldn't quite agree on that. So if we do see a deal coming up when these talks do resume, it could be around that 10 billion, higher, lower. So that's really the crux there, because we've got two powerful, influential companies led by two powerful, influential people in Abu Dhabi Inc. And one wants to sell at a good price, the other one wants to buy it at a high price. So that's the inherent conflict there, always on money. But there is that interest in getting that deal done. So we did see those talks start kind of end of last year, falling apart a little bit at the start of this year. But there is the desire, we understand from our sources, to resume those talks.
Okay, Anthony, excellent reporting. Thank you so much for bringing the story to us. Anthony DePaula, Bloomberg's Middle East energy markets reporter. Thanks. Now, Niger has ordered 3 Chinese oil executives to leave the country over their failure to follow a provision aimed at promoting the use of local goods and services. The move is part of a broader shakeup of foreign mining companies by military regimes across West Africa to generate more revenue from natural resources. For more, Bloomberg's Ondiro Ganga joins us now from Kigali, Rwanda. Just bring us up to speed on this story. It feels like a very dramatic decision out of the government. What do we know about the grounds for the expulsion of these individuals?
Hi, Jumana. So the government says that there was an amendment to the 2024 mining code, and these companies failed to adhere to it. The Office of the Prime Minister says that they had advised these companies that Nigerian subcontractors need to be more than Chinese subcontractors, and that did not happen, and that laid the ground for this expulsion. Among those expelled include the top executive for China National Petroleum Corp that gave Niger $400 million advance payment for the oil in order for this country to be able to continue honoring its debt obligation after there was a military coup in 2023. Together with other 2 executives, they were given 48 hours to leave the country. And this is not something new. It has happened before. Niger has revoked the operating license of a hotel before on grounds of discrimination and administration violation. And they've also taken over a uranium mine from French company Orano SA.
What about neighboring countries? We know that in Mali, the government there has been embroiled in an ongoing issue with Barrack. How does the decision in Niger get factored into what other countries may decide to do as well?
Jumana, if you look at the Western Sahel, there have been a series of military coups, and because of this, a lot of things have changed. Economic activity is not at the same level that it was. International partners have gotten a little bit of cold feet because many would prefer a democratic government, elections to be held, many of whom have not made it very clear when elections are going to come. And this has affected the rate and pace at which money is coming into the country. And so we are seeing them beginning to become more and more keen on their natural resources, reviewing these contracts, talking to some of these companies. And when conversations do not work, they apply force. For example, Mali has seized gold from Barrick Gold. They have arrested some of the executives, 4 still in prison, and they're demanding $197 million in terms of settlement. So all this pressure is to try and raise more revenue so they can fund their day-to-day activities.
Bloomberg's Andira Ganga in Kigali, Rwanda. Thank you so much for bringing us that report. Now, Secretary of State Marco Rubio says South Africa's ambassador to the U.S. is no longer welcome in the country, escalating a running feud between Washington and Pretoria. Rubio's announcement came after it was reported Ambassador Brahim Rasool had said Trump and his supporters are effectively a supremacist movement projecting white victimhood. Ethiopian Airlines and the African Development Bank are to partner to build a new airport that's set to be Africa's largest. The parties signed a letter of intent to construct the facility near the capital, Addis Ababa, at an estimated cost of $7.8 billion. The airport will enable Ethiopia to increase annual passenger capacity from 17 million to more than 60 million by 2040. And coming up, we discuss the UAE's growing presence in the cryptocurrency space with the CEO and co-founder of BitOasis. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Joanna Versace in Dubai. Let's discuss cryptocurrencies. The UAE has been increasingly growing its presence in the sector, with recent investments including $2 billion in funding for Binance. My next guest says there are 2 reasons for Abu Dhabi's rise in the space: readily available capital and regulatory maturity. So to discuss this and more is Ola Doudin, CEO and co-founder of BitOasis. Well, maybe actually let me just start with the excitement around Abu Dhabi, UAE, Dubai as a hub for cryptocurrency. Why has that become the case in the last few years?
Thanks, Joanna, for having me on the show. It's a pleasure to be here on air. There's been a lot of momentum, obviously, here in the UAE and across the region, and I think a lot of that is really due to Abu Dhabi and UAE being a first mover in introducing crypto-friendly regulatory frameworks. So we've seen that in ADGM in 2018, and those frameworks continue evolving as the space and crypto use cases evolve and the innovation in the space as well. And second, as we've seen in the recent deal with MGX and now obviously also Mubadala investing in Bitcoin ETFs, there's abundance of capital. And Abu Dhabi has been doing bold moves in the AI space, and now we're seeing that in crypto.
Yeah, how much of a big deal do you think it is for the industry as a whole that you have these institutional investments going into the cryptocurrency space? You mentioned Binance deal, but I'm just curious to hear how you think what the knock-on effects are going to be on the broader industry.
It's quite significant, for sure, and I think it's validation that institutional adoption of crypto and the Web3 space is, happening, and it's here to stay. First, it de-risks the industry. It helps it to scale. It enables, further innovation. Specifically, I would say the MGX deal is significant because it's the largest investment that went into a crypto company, ever. Second, it's been made in stable coins. I think is a further validation of the use cases of stable coins at scale. And specifically, having that investment done from MGX, which is an investment vehicle focused on enabling AI and infrastructure, perhaps we're seeing the convergence of AI and crypto use cases in the future.
Okay, so those are the positives. Last month, there was a massive security breach with Bybit, one of the crypto exchange providers over here in Dubai, and up to $1.5 billion worth of Ethereum was stolen. Is the system robust enough to deal with, as you talk about, the growing amount of cryptocurrency interest and trading there is in this region?
So obviously, crypto is an emerging space. It's a new industry, and as a technology, obviously there's been in terms of adoption and overall use cases, there has been instances where, perhaps there has been consumer funds that have been hacked or lost, and there are risks in this space for sure. I think with the opportunity growing and the industry scaling, risks also, grow as well. Now, at the same time, having the right regulatory frameworks, having the right companies implementing, I think, the right controls and guardrails is super important to ensure there's consumer confidence, there's institutional confidence in this space, and also ensuring that this industry can continue to scale. So I think ultimately, having robust regulatory frameworks, but at the same time, companies that can implement at scale is super important for the growth.
So do you think the industry can actually overcome some of the reputational concerns? I mean, I speak to many people, right? And what I found is either you're an all-out believer in crypto or you're very negative and skeptical because of the various issues that have arose the last few years, be they scams or frauds or bad actors coming into the space. Do you think that there is a chance that the crypto community can actually win over the skeptics?
I believe so. Again, it's a new industry, and I think with that, there's been a lot of trials and errors. I think there's been massive opportunities and value that has been created, but at the same time, there probably have been some missteps and some risks that ultimately materialized. Again, the space is going into a phase of maturity with more jurisdictions regulating it, more institutions coming into the market, and ultimately with institutions coming in, I think there's a lot more de-risking that is happening in the space. The next, I think, 3 to 4 years will be really interesting, especially with the U.S. now taking a more crypto-friendly approach.
Exactly. So you brought me to that. I was going to ask you about that because I felt like so many people were very optimistic about having a U.S. administration on board who would be more open to the crypto industry, perhaps more supportive of the crypto industry evolution. But yet you look at the performance of cryptocurrencies this year, and it's been very disappointing. You had a massive pullback in Bitcoin. I think some people were disappointed, perhaps, with the digital reserve announcement out of the Trump administration. How do you see this right now? How do you see the most recent volatility in cryptocurrency space?
Yeah, I think we shouldn't focus on the short-term volatility, right? Again, I think a lot of that is really focused on certain private decisions the administration has taken from a macro, perspective or an economic perspective. Ultimately, the crypto space and, Bitcoin and other cryptocurrencies will be impacted with the performance of other financial markets and the sentiment in the space. But I think we should focus on the broader picture, which is, the largest crypto market, the largest economy in the world, now taking a pro-crypto stance, wants to enable that industry and enable innovation as well. And I think ultimately that will trickle down to other jurisdictions and other use cases, in the space as well. So I think in a medium long term, the sentiment remains very bullish, in the space and overall. And I think it'll be really exciting, coming 4 years for the industry.
Yeah. Okay, let's see how it plays out the rest of this year. Ola, great to have you on the show. Ola Doudin, CEO and co-founder of BitOasis. And for more stories looking into the intersection of wealth and power in the region, sign up for our Mideast Money newsletter on Bloomberg.com/newsletters. Coming up, DeepSeek challengers. Baidu releases a new AI model to take on DeepSeek. More on China's tech advances next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Joumana Versace in Dubai. Chinese search giant Baidu has released a new AI model that can articulate its reasoning. The firm is looking to regain momentum against up-and-coming rivals such as DeepSeek and established competitors such as Alibaba. Let's bring in Bloomberg Intelligence senior analyst Robert Lee. Robert, so is this ERNIE model released by Baidu another DeepSeek moment for financial markets?
Anything's possible, but I would say that would be quite a generous read to them, because if you followed the news flow carefully in the China AI sector, we've seen a flurry of models announced over recent weeks, We obviously saw DeepSeek's announcement back in January, followed up by similar announcements from the likes of Tencent and Alibaba. Without exaggerating, it's almost a new announcement every other day at the moment. So I guess this demonstrates that the fast pace of technological development within China. Also, Baidu, which was once seen as the leader in China's AI sector, has progressively lost its lead over the last 18 months. So I guess the announcement from them is a degree of catch-up. But the question I keep coming back to every time is, full marks in terms of technological progress and development. What about the monetization? Because most of these tools remain available to users for free.
Yeah. And what's it going to do to help boost Baidu's bottom line? We know that they've been losing on advertising sales due to the slowdown and general pullback in China and Chinese activity. Could this advent of their own AI model help turn Baidu's fortunes around?
Right, you're absolutely right. Again, for people who are less familiar with Baidu, it's referred to as the Google of China. So it's the dominant, or was the dominant, search engine, and therefore it's an ad-based revenue model, and that's been under pressure as advertising spend moves to more contemporary platforms or rivals like Douyin or China's TikTok. But no, the monetization outlook, not just for Baidu, but for the rest, remains somewhat challenged, as I touched on earlier. I think there is scope for incremental upside within their cloud computing business, because cheaper models and the proliferation of models should help drive development activity. So, we could see a little bit of upside there. But at the end of the day, again, if you're giving these products free to your clients or your customers, you're not generating any revenue, are you? So I think it shows, or the announcement shows, that Baidu is still managing to stay in the game, but the route to monetization remains very unclear and, and a distant prospect. Yeah.
Rob, as ever, thank you so much for the reporting on this all-important topic. Rob Lee, Senior Analyst at Bloomberg Intelligence. And a look at equity futures as we head into the European Open. Everything is leaning red now. S&P futures down 0.5% after a better end to the week last week. But European stock futures also in the green as we talk of that potential call between President Trump and Putin tomorrow taking place. Now, coming up in the next hour, we speak to Shane Oliver, AMP's head of investment strategy, and we'll be talking more about the Russia developments. I'm Jumana Versace in Dubai. Stay with us. Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. China optimism, shares gain in Asia ahead of a briefing on Beijing's plans for more stimulus. Retail sales and industrial output both came in ahead of estimates. The U.S. says that strikes on Yemen's Houthi militants will be unrelenting until the group stops attacks in the Red Sea. We'll bring you all the latest from the region. Plus, President Trump says he'll speak with Russia's Vladimir Putin tomorrow. The U.S. Special Envoy says the president expects some sort of a deal in the coming weeks. Well, good morning again, everybody. It's just gone 9 a.m. across the Emirates. I'm Jumana Versace in Dubai.
And I'm Jennifer Zabasaja in Johannesburg, where it's just gone past 7 a.m. Welcome to the second hour of Horizon's Middle East and Africa. And Jumana, that was quite a development that we got just over the past few hours with this potential call between Trump and Putin. But also, it's quite a big eco data week, monetary policy week, so a lot for investors to digest.
Yeah, another busy week, and let's see what happens on the tariff front as well, Jen. We spent all of the last few weeks talking about those tariff discussions, tit for tat. April 2nd shaping up to be a big day. But on Friday, we actually had a better close for Wall Street. For the week, the major U.S. indices were still tracking lower, down 2 to 3%. But on Friday alone, S&P had its best day since November. So quite the rebound. That being said, still negative for the week, and of course, very close to correction territory, as we were talking about. Today, futures leaning towards the red, as Jen was just highlighting. Big week in terms of data. We also have the Fed coming up on Wednesday, so watch out for any clues in monetary policy from that meeting. Gold also pulling back from all-time highs of $3,000. Slightly weaker today, but still notably up more than 14% year to date. So one of the best performing assets this year. Brent also seeing a bit of a bounce this morning, up 0.8%. We're back at a $71 handle. This on back of, I would say, geopolitical developments in this part of the world with the attacks from Houthis onto ships and the strong words out of the Trump administration that their attacks on Houthi assets will be unrelenting. So keep an eye on how that story pans out. It is affecting the energy complex. Euro also in focus. We had a big jump on Friday. Positivity once again being priced into European assets on back of that big German infrastructure and defense spending plan. So the CDU party came to an agreement with the Green Party vis-a-vis that spending plan. On the back of that, we saw the euro jump on Friday. We also saw bond yields sell off about 8 basis points and continued money pouring into defense stocks in the European space. But switching over, we also had some data come through this morning from China. Very quick look at some of the key data that came in, the indicators coming in for the most part better than expectations, though we will get a little bit more detail about perhaps what has been going on under the hood with Min Lo shortly. But for now, let's just take a quick look at how markets in Asia are reacting to the data that has come through. Avril Hong is in our Singapore studio. Avril.
Yeah, Jumana, the focus is quite clearly on this consumption briefing couple hours from now. But for Chinese stocks, I think the next drivers could also include the earnings releases from some of the big Chinese tech firms this week, including Xiaomi, Meituan, Tencent. And then there's also the idea of this so-called C put. But amid all this, also highlighting the rest of the region looking quite positive, tracking that Wall Street rebound. But note as well that we're actually seeing dollar yen in focus earlier, lower following the developments from late last week. Of course, the biggest labor union in the country managing to negotiate some of the biggest pay rises we've seen in decades. But that reversal you're seeing on dollar yen ticking a bit higher now, sitting above the 149 level, is related to Trump talking about how reciprocal tariffs might include auto duties. So Japanese automakers could also be affected. But that's what you're seeing across the board in the region for now.
Yeah, I guess we'll worry about it when it does happen. Avril Hong in Singapore, thank you so much. Well, bright spots all around in China's latest economic data that was released earlier. Bloomberg's China correspondent Min Lo joins us from Hong Kong. Min, just break down the numbers for us. So what did we get from China this morning?
Yes, pretty solid start to the year. We have the combined January and February data that was just out beating estimates on most fronts. You look at fixed asset investments coming in at 4.1%, a big beat there, suggesting that the government is leading expenditure to drive growth here. And you look at industrial production, that's the standout here, 5.9% versus the surveyed number of 5.3%, suggesting that industrial activity is still pretty resilient despite those tariff risks. And retail sales, that's the one that investors are focused on today, 4% higher than estimates of 3.8%. Again, something that could help offset the impact of tariffs. So we're in this sort of Goldilocks scenario here where the data is not so strong as to mean that we won't get any more stimulus from the government, but not so weak as to worry investors about the immediate short-term trajectory of the economy. You look at the last two indicators, their property investment down about 10%, and you have the surveyed jobless rate at 4.5%. That's the strongest or the highest jobless rate since February of 2023. And these are the two indicators that we hope to see improve, because those are the ones that would help to restore confidence in people's ability and willingness to spend in the economy.
And over the course of the weekend, China officials also unveiled policies that are, in effect, going to try to stimulate and lift consumption. What do we know about the measures that have been unveiled? And I believe there's also a press conference taking place later this afternoon. What should we expect out of that press briefing?
Yes, so the State Council over the weekend had unveiled these very comprehensive action plan to boost domestic consumption. And some of the measures include trying to promote this reasonable growth in people's income, to create a mechanism to adjust the minimum wage. There are also measures to promote investments that would in turn support consumption, to create these sort of ice and snow tourism festivals, for example, and extend visa-free policies to other countries so that that can attract more inbound consumption. There are also measures related to people's social welfare, raising the pension, providing incentives or subsidies for childcare, providing incentives for childbirth to reduce that demographic drag, and of course stabilizing the stock market and the property market, because these are two channels through which people accumulate wealth. So we're expecting to hear a little bit more details from various ministries later this afternoon, 3 p.m. We have a combined presser from the Ministry of Finance, the Ministry of Commerce, the NDRC, which is the top economic planner of the country, and the central bank. So that suggests a very whole-of-government approach, something that could go beyond just upgrading household appliances.
Yeah, some people are calling it the she put for stock markets. And of course, the rest of the world are waiting for the Trump put on U.S. stock markets. Bloomberg's China correspondent, Mimidlo, thank you so much.
Now, those pledges from Beijing are planned to take more steps to spur consumption, are driving gains in the Asian session. Joining us is Shane Oliver, Head of Investment Strategy and Chief Economist at AMP. Shane, great to get you on today. Thanks so much. So let's just start where Min left off. We are expected to get a press conference later today. Based on what you have seen at this point in time from officials, is this enough for you to be bullish on the direction of travel for Asian equities, for Chinese equities?
I think that's a good question. I must admit I am fairly heartened by what I've seen over the last few weeks. The two sessions conference, the National People's Congress, indicated more stimulus, a commitment to growth around 5%, which I guess suggests that if there are more threats to Chinese growth, then they will be met with more stimulus. Then, of course, we've got the tariffs to worry about. But the good news is that the Chinese authorities do seem to be moving towards stimulating consumer spending. And what we heard from the authorities over the weekend is fairly positive in that regard. Now, hopefully, today's press conference doesn't disappoint, but I'm inclined to the view that it probably won't, and that the Chinese authorities have been waiting for this moment. They didn't want to jump in last year because they knew the tariff threat was coming, but they just didn't want to get in there too early, because if you fire off all your support too early and then the tariff threat comes along, then that can have the effect of making your support look somewhat dated. So I think I am reasonably positive here that China is moving in the right direction. Consumers are definitely the group in the Chinese economy that needs support. Yes, we got some better data out for the January period, better than expected, and mostly up slightly from where it was in December. But by the same token, that was before the tariffs. So I do think that China needs more, and I'm fairly optimistic that authorities will deliver that.
Does that mean, Shane, the concern around what tariffs could potentially bring to the economy is in the past, or is this still a very real concern for investors like yourselves?
No, that's still a very real concern here. I mean, it seems not a day goes by without some comment out of the Trump administration that unsettles markets. Sometimes you get some positive stuff, or that they just don't say anything, like on Friday, and then the market interprets that positively. But I think there's a long way to go here, and we could still get more tariffs imposed on China at that April D-Day, April the 2nd. I think it was going to be April the 1st, but many people call that April Fool's Day, so they moved it to April the 2nd. So that story is going to continue to unfold, but it looks like the Chinese authorities are realising the way to go here is to stimulate the Chinese consumer. That's where I think future growth in China lies, and they're doing the right thing. But it doesn't mean that we're out of the woods yet. I think there's still going to be a lot of volatility around this. But if you look at the Chinese share market, it is relatively cheap in the great scheme of things. PE's around 14, 15 times. Not as low as it was, but it has moved up, but nothing like the 25-odd times PE that you're seeing in the US. And so I think there is potential here for that market to continue to trend higher, even though it's going to be a bumpy ride. We might get a boost out of some of this stimulus, then get more tariffs, a bit of a setback, but the broader trend, I'm reasonably optimistic, will remain up.
Shane, let's just pivot to the U.S. because you were mentioning it there. It's a big week, obviously, for monetary policy for the Fed. Joanna was mentioning earlier how last week we did see U.S. equities closing on the week lower, but still there was a bounce that we saw on Friday. Is the pessimism potentially of the direction for the U.S. economy, is it overblown? What do the recent price actions indicate to you?
Well, I think what we saw on Friday was just a bounce from oversold levels. The US share market had become very oversold. There was an absence of new negative comments from the Trump administration, particularly from Donald Trump. So no news is good news, so to speak. And also there was a risk of a government shutdown, and that had been averted. So those things explain the bounce. But I think it's way too early yet to say that we've seen the lows on shares. The US share market arguably is due a correction. The so-called Trump put looks to be a long way away from here from kicking in. In other words, the strike point of that put is lower than we are at present. I think it still exists, but it will take a while to get there. So I think that the risk is there's still more downside in the US share market in the short term. I don't think it's necessarily terminal. I think at some point Trump will pivot. The focus will shift from the tariffs towards things like the tax cuts and deregulation. They'll be seen as more positive. But for the time being, I think the risks are still on the downside for the US share markets. And the fact that we had a bounce just tells me that the market was very oversold.
Yeah, and we're seeing some downside right now for futures. We'll have to leave it there, though. Shane Oliver, Head of Investment Strategy and Chief Economist at AMP. Shane, thank you so much for your insights today. Now, still ahead, are we headed towards a ceasefire in Ukraine as Presidents Trump and Putin speak tomorrow? We ask at Enmetena Advisory, but up next, the U.S. has warned of, quote, unrelenting strikes against the Houthis, who have vowed to continue retaliation in the Red Sea. Details coming up next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasaja in Johannesburg. Iran-backed Houthi rebels have claimed responsibility for a second attack on U.S. warships in the Red Sea. The group says this is in response to U.S. airstrikes in Yemen and have vowed to continue the maritime operations until the Gaza blockade is lifted. Meanwhile, the U.S. has warned of, quote, unrelenting strikes until the group stops shooting at civilian and military vessels in the Red Sea. Joining us now is Bloomberg's Dan Williams from Jerusalem. So, Dan, just talk to us about the current escalation that we're seeing right now when it pertains to the U.S. and the Houthis. How did we get to this point?
Well, I think what we're seeing is an intensification of a confrontation that was in place for many months last year under the Biden administration, given that the Houthis quite early on in the Gaza war began attacking shipping they described as Israeli shipping, though frankly those attacks were quite loosely based in terms of targeting, and many of those ships had no clear link to Israel in terms of full ownership or being flagged as Israeli ships. Major and disruptive attacks on a major waterway. And I think what the Trump administration is signaling here, now that the Houthis have said they will restart such attacks, is that unlike the Biden administration, it's willing to go to the mat. It's willing to launch very intensive airstrikes at the Yemeni capital, very lethal airstrikes. It's also worth remembering in this context that the Trump administration redesignated the Houthis as a terrorist organization. So the U.S. signal here appears to be, don't think about disrupting international shipping again. There's a new president in the United States, and this time the U.S. Navy is engaged to win.
Wow, that's quite the escalation that we're seeing there. Dan, let's also talk about some news that we got over the weekend, and that is about the firing of Israel's Shin Bet, which is the domestic security director. What is the significance here? Because this is not final yet until a vote, but what's the significance if we do see this going through?
I think this is a story that may perplex many foreign readers. The Shin Bet is something like a combination of the FBI and the U.S. Secret Service. It's a civil service position, and presumably in a working democracy, its director serves at the pleasure of the chief executive, in this case, the prime minister. So on the face of it, there should really be no big deal about the Shin Bet director being fired. However, Israel is not a normal democracy. It's a democracy at war. A good number of its citizens are very upset at the sitting prime minister over the October 7th attacks that began this war from Gaza, this regional war now more than 17 months old. There is a deep suspicion that Netanyahu, who denies wrongdoing, is basically foisting responsibility for that security failure on any of the security chiefs and all the security chiefs who were in place at the time while not taking responsibility himself. A second issue is the fact that the Shin Bet, being a domestic intelligence service, security service, is looking into allegations that some of Netanyahu's aides had been moonlighting as PR advisors to Qatar, which has raised the issue of possible foreign influence peddling in the Israeli government. Qatar being an especially touchy subject, not just because it's mediating a new Gaza truce or trying to, but because of its open and long-term ties to Hamas and Iran. Of course, Netanyahu denies any wrongdoing on that front as well. But there are two running narratives here that have inflamed popular opinion against Netanyahu, generally those who are already opposed to him. It's simply touched anew on the very polarizing issue of responsibility.
Bloomberg's Dan Williams from Jerusalem. Dan, always great to get your reporting on. Thanks so much for joining us. Now, coming up, we stick with geopolitics. President Donald Trump says he'll speak with Russian President Vladimir Putin tomorrow. The details on that next. This is Bloomberg.
Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. President Donald Trump has confirmed he will be speaking with Russian President Vladimir Putin tomorrow as the U.S. continues to push for an end to fighting in Russia's 3-year war in Ukraine.
I'll be speaking to President Putin on Tuesday, and a lot of work's been done over the weekend. We want to see if we can bring that war to an end. Maybe we can, maybe we can't, but I think we have a very good chance.
The planned conversation comes after a meeting between U.S. Special Envoy Steve Witkoff and Putin last week in Moscow. Bloomberg's Greg Sullivan joins us now with more. Greg, what do we know about this call that's going to happen tomorrow?
Well, we know that the ceasefire will definitely be a topic of conversation, probably the main focus of the call. Before the call, Trump said that they were going to discuss a couple issues, including land and a nuclear power plant, or a power plant, which I assume was the Zaporizhzhia nuclear power plant, the largest in Europe, that Russia has held since early in the war. We know that before the talks with Ukraine, Secretary of State Marco Rubio showed up saying that there was going to have to be concessions on territory. So with Trump talking about that, that's likely to be a topic of conversation. We could very well see them talk about the contours of an eventual ceasefire and potentially even win.
Could this be the breakthrough the world is looking for? Could this be actually the phone call that decides on whether Russia also sign up to that ceasefire proposal that Ukraine agreed to last week?
It's hard to see. Russia has been very reluctant to agree to a quick ceasefire. They've ruled out a truce during negotiations because they're basically making battlefield gains right now. They want to dislodge Ukrainian troops from Russian territory. They've made a lot of progress in Kursk, and they'd probably like to see that happen before any further negotiations happen. So time is really, Putin's calculating that time is on his side. So a quick ceasefire is probably unlikely to come if Putin gets his way.
So he might want to push it out a little longer. What do you think Ukraine and Ukraine's European allies will be watching out for on this call today?
Well, they'll definitely be watching very carefully.
Tomorrow, I should say.
Yes.
Yeah, sorry.
They'll be watching very carefully. They're very concerned that in Trump's rush to get a ceasefire, he may make too many concessions. They're clearly worried about their own security framework, both in Europe and Ukraine, and they don't want Trump to see that in the rush for a ceasefire at any cost.
Yeah, and yet they are still having discussions about what military and defense support they can continue to provide to Ukraine, even once the ceasefire is agreed to. Talk over the weekend still of X thousand troops being sent from UK and France to Ukraine, but that's a non-starter for President Putin. So how do you square that up?
That is a big question in any kind of ceasefire agreement, because Russia has ruled out NATO troops on the territory of Ukraine, but Ukraine has insisted that it needs a security guarantee that is enough of a deterrent that Russia won't resume hostilities down the road. We've seen players like the UK and France really step up and try to lead the initiative with their own defense framework, but there's a big question of whether they can do it and how fast, especially if the U.S. pulls back.
Yeah. Okay, Greg, all eyes on that phone call tomorrow then. Bloomberg's Greg Sullivan, thank you very much. Syria's military fired rockets and shells at Lebanon yesterday after accusing Iran-backed Hezbollah of executing 3 Syrian army personnel, sparking unusual tensions between the two neighbors. Syrian state-run news agency says the militant group abducted the army personnel in an ambush on the border west of Homs in what the Syrian Defense Ministry called a dangerous escalation. Hezbollah denies it was involved. And let's take a look at equity futures. We are leaning towards the red, so S&P futures, NASDAQ down about 0.5% respectively, but European markets slightly in the green, up 0.1%, and we continue to see that positivity surrounding European markets, European assets, the euro currency, bond yields, all selling off after that German agreement on Friday to pledge for further defense spending and infrastructure spending. So that's been a relative bright spot amidst that sea of red on the boards this morning. But coming up, is the end to the Russian invasion of Ukraine near? We'll be speaking to Max Hess of Enmetena Advisory next. This is Bloomberg.
This is Horizons Middle East and Africa. Our top stories this morning. China optimism shares gain in Asia ahead of a briefing on Beijing's plans for more stimulus. Retail sales and industrial output both come in ahead of estimates. The U.S. says strikes on Yemen's Houthi militants will be, quote, unrelenting until the group stops attacks in the Red Sea. We'll bring you all the latest from the region. Plus, President Trump says he'll speak with Russia's President Vladimir Putin tomorrow. The U.S. Special Envoy says the president expects some sort of a deal in the coming weeks. It's gone just past 7:30 a.m. in South Africa. I'm Jennifer Zabasaja in Johannesburg.
And I'm Joanna Versace in Dubai, where it's just gone 9:30 a.m. Welcome to Horizons Middle East and Africa. And again, looking ahead to what is going to be quite a busy week. But the main geopolitical event, I would say, just it came out in the last hour, the fact that President Trump and President Putin will be holding a phone call tomorrow. So we could potentially see a breakthrough on those ceasefire discussions, or perhaps not, but clearly going to be a focus for the investment community this week as well.
Yeah, definitely going to get developments one way or another, Jumana. But as you were mentioning, of course, there is quite a bit of eco data on the docket this week, as well as monetary policy decisions. Of course, there is the Fed here in South Africa will also get a monetary policy decision. But let's just see where markets are positioned ahead of the trading day right now. If we take a look at U.S. equity futures, starting off in the red, as we can see there, NASDAQ futures down just over 0.5%. We did see the slide coming after we heard from Treasury Secretary Scott Bessent saying that the market's reaction is maybe potentially the market's reaction to the recent decline is healthy. So right now, NASDAQ futures are down. But last week, we did see U.S. equity indices closing in the red on a weekly basis, though on Friday, we did see a bounce, in particular with the NASDAQ index rebounding after quite a volatile week. The euro is also in focus. It's relatively flat right now, though. We did get some news about German's parliament set to approve the spending package that we had been talking about, that breaking from decades-long stagnation in Europe's decision to spend on defense. Right now, we've seen the dollar actually gaining nearly 5% this month on hopes for this fiscal spending revival in Germany. So potentially we see some changes happening there. We're also seeing crude oil right now edging higher, almost 0.8% there with Brent crude, extending gains from Friday. We saw an additional boost coming after we did get that news from Beijing on supporting the economy, though there's also the geopolitical developments between the U.S. and the Houthis still making some impact there for Brent crude. But still, the picture for oil remains relatively bearish. We did get some news from Goldman analysts who added to those that are reducing their outlook for Brent. They actually said they reduced it by $5 for their December 2025 forecast to 71. Right now, Brent crude is just about $71 a barrel there. And gold largely unchanged. Still, we're paying close attention to it after we saw gold touching $3,000 an ounce last week, pulling back now. But still, as our MLive team suggests, still retaining some support. And a quick check at our terminal chart this morning. As we've covered for quite some time, big tech valuations have fallen sharply over the past few months. Though, as this chart is still showing, they're still far from the lows reached in 2018 and 2022. We're actually seeing the price-to-earnings ratio of the Mag 7 companies still currently at 26 times projected earnings. And so they are cheap, but still not enough to entice wary buyers. Now, let's check in on the yen in particular. We were talking about currencies earlier. Avril Hong is standing by in our Singapore studio with more on that. Avril, what are you watching?
Well, Jen, it is Fed BOJ week, so of course dollar yen is in focus, and just in the past hour we saw it at one point popping above the 149 level after Trump's threats about auto tariffs in terms of reciprocal levies. But I just wanted to highlight how the path of the BOJ still seems to be one of it taking its foot off the stimulus pedal, especially when you look at the Shunto negotiation results from last week, right? These pay rises, the biggest in, 3 decades? And then don't forget as well, when it comes to the BOJ, this ultra accommodative stance does seem incongruent to what we're seeing in the rest of the world, the board, because Aussie yen is also in focus. This is a pair that's of course often seen as a gauge of traders' risk appetite, and this chart, courtesy of MLive's Mary Nicola, shows you how closely it's been tracking a global gauge of stocks, which also suggests that Aussie yen could remain under pressure from here on out, given how global uncertainties could weigh on stocks. Jen?
Thanks so much, Avril Hong in Singapore for us there. We were mentioning this to you. Oil is up for a second day after top importer China says it will take steps to revive consumption by boosting incomes. Crude has also reacted to the U.S. ordering fresh attacks on the Houthis in Yemen. Joining us now is Bloomberg's Stephen Stupczynski from Singapore. Stephen, we were just talking about Goldman Sachs cutting their forecast for December 2025 for oil. Wrap together this news for us and where we're at right now.
Right. So you've seen the moves over the last few days, as you said, more as a relationship to geopolitical elements that you're seeing in Yemen, as well as some positive news out of China. China has consistently not lived up to the expectation of oil demand. As the world's biggest oil importer, there was some expectation that when COVID curbs were brought down that they would increase demand quite significantly, but that hasn't played out. Now, the bearish element in the market that Goldman points to are a fewfold. One, you have the U.S. Tariffs that could potentially reduce demand for oil around the world if there is an economic slowdown. On the same time, you have OPEC Plus committing to their increase in output starting April 1st. It's not a lot of oil that's being added to the market. They're going to add some in stages, but they're not pushing back this addition. They've done that many times before. This time they're sticking to their guns and they're going to increase output. And then overarching, kind of looking at over everything at the moment, is where the analysts are seeing this oversupply. You have the IEA coming out last week seeing a 600,000 barrel glut essentially in the oil market for 2025. That's about 0.6% of total production. You also have others like Goldman coming and saying that they're seeing this persistent glut. Goldman, one of the more bullish in the market previously, they're coming out and kind of reversing their view and saying that this oversupply is going to lead to prices that are lower than what they're expected, about $5. Now, $71 for Brent, as you can see here, is around where we are right now. So they're not expecting a big upside or downside over the next 8 months.
Stephen, let's zoom out to global commodities. You and your team have a story out about it's a busy week for global commodities. Talk to us about what is key to watch. Is it steel when it comes to tariffs? Is it potentially cobalt when it comes to the DRC and their export ban?
I mean, I think there are a number of different things to watch. Actually, one would be natural gas again, actually, because of these discussions that will be happening between Trump and Putin. One thing to watch out for is whether or not there's any cooperation afterwards with energy. That's something that we've reported previously. When you're going to steel, you're also looking at potentially China, right? There is just some data earlier today that output for steel dropped for the January-February section of the year. And that's sort of pushing to this view that China is actually reining in this oversupply. They've struggled for the last few years because of their property turndown. The demand for steel has dropped. And so this production data does show that we're starting to see that China wants to further kind of curb production. They haven't said exactly how they're going to do it or what their targets are, but they do want to bring down production as well. And then, as you said, cobalt, that's one more that we should keep an eye on. Congo has officially declared that they are halting their exports for 3 months from February, and that has pushed prices up from where they were around a 9-year low.
Busy week there. Bloomberg, Stephen Stupczynski. Stephen, thanks so much for your analysis.
President Trump says he will speak with Russia's President Putin tomorrow. This as part of ongoing U.S. efforts to end Moscow's 3-year war in Ukraine. Joining us is Max Hess, principal at Enmetena Advisory and author of Economic War, Ukraine and the Global Conflict Between Russia and the West. So very well placed to give us analysis on everything that has happened in the last couple of weeks. Let me just start off by asking you, Max, what you make so far of President Putin's reaction to the U.S.'s truce proposal that Ukraine have already signed on to.
Well, firstly, thank you so much for having me, Jumana. Putin's reaction has been a clear rejection of the proposal. The proposal put forward was for an unconditional ceasefire for 30 days, and Vladimir Putin has come out and insisted that all of the conditions that he set forth at the beginning of his full-scale invasion be met, including on demilitarization and including on annexation of territory in Ukraine that the Russian army has never fully occupied. So these have been negotiations about negotiations, but Vladimir Putin right now is not seriously looking to end his assault. He's looking to use this process to strain tensions within the West and improve his position in fighting in Ukraine at the same time.
How likely is it that President Putin actually pulls back from some of those points that he put forward that are non-negotiable, i.e., where could we see the concessions come from?
Well, right now, Vladimir Putin hasn't indicated where he plans on making any concessions. I do think there are some that he could make that will appeal to Donald Trump in particular, around NATO membership in Eastern Europe more broadly, around U.S. positioning of forces in countries that neighbor Ukraine or also neighbor Russia in northern and Eastern Europe. But Vladimir Putin is quite insistent on a new Ukrainian government being elected, or ideally, in his words, being put in place, and he's rather insistent on annexing all of that territory as well. So far, he hasn't signaled willingness to make any concessions, and he hasn't needed to, because the Trump administration so far has only focused on having Ukraine increase the concessions that it is willing to make.
Yeah. Well, my colleague Anne-Marie Horderin had a conversation with the NATO Secretary General on Friday. Let me just play you a little piece of tape from that interview.
It is normal if the war would have stopped for Europe to somehow, step by step, and also for the US, step by step, to restore normal relations with the Russians. But we are absolutely not there yet. We have to maintain the pressure on them to make sure that they are willing to engage seriously in talks with the American administration and, of course, also with the Ukraine.
So NATO Secretary General is saying we have to maintain pressure on them being Russia in this situation. What leverage can the U.S. exercise over Russia right now in order to force their hands at the negotiating table?
There are still significant economic leverage points that the U.S. can enact or raise. We saw actually one of these come just on Wednesday this past week when the Trump administration allowed a Treasury license to expire that had enabled transactions with sanctioned Russian banks that were related to energy. It is expected that this will complicate a lot of Russia's ongoing oil trade with third countries, places like India, even refineries elsewhere that refine Russian crude. and then sell it on to third countries. There are also other pressure points that the U.S. in particular can continue to raise on the secondary sanctions threat, on sanctioning additional Russian LNG projects. The Russian economy right now is really in an increasingly stagflationary position. This is risks impacting Russia's budget in particular if the oil price is further impacted. We have also seen in the past Trump himself, as well as some Trump administration officials like Treasury Secretary Scott Bessent, talk about their criticisms of the Biden administration's strategy, which was to try to keep Russian oil sales flowing, but at below that $60 level that was the trigger for Russian crude in the G7 oil price cap, but that has been ineffective. So there are additional ways, however, that could come, but it would have a real impact on global oil markets outside Russia as well.
Yeah, let's talk about the European reaction here, because, again, it appears to be the case that all of the developments, especially with Trump's approach to the transatlantic alliance, it's sort of given the Europeans a shot in the arm. They're very much focused now on their own defense spending plans. What role do you think European allies are going to play in helping to support Ukrainians' defense in the future, even after the ceasefire is agreed to? Are they going to play a substantial role?
They're certainly going to play a substantial role, and they already were playing a substantial role. The European Union plus the UK were already overall larger contributors to Ukraine's aid, both financial and military, prior to the Trump administration coming into office. But Donald Trump has made very clear that he wants to see U.S. funding for Ukraine decreased in the future and wants Europe to take on a larger share, both of its own defense as well as supporting Ukraine. The overwhelming majority, more than 2/3 of the frozen Russian assets sit in Europe. It will be up to European political will to determine what happens to those and how those are used to fund Ukraine in the future. Past G7 statements have referenced using them to ensure that Ukraine receives reparations for this invasion by Russia. One crucial factor, though, for that North Atlantic alliance is even if Europe does meet all of these military and defense spending goals that have been laid out in the last 2 or 3 weeks, for the foreseeable future, particularly for a lot of crucial ammunition, it will have to support purchases from the United States of those arms and armaments to give to Ukraine, because the industrial capacity in Europe to produce them just isn't there yet.
Yeah. That's what economists call leakage. All right, Max, a pleasure to chat to you this morning. Max Hess, Enmetena Advisory Principal, thank you so much for joining our show and for the analysis. Now, coming up, Niger and Mali crack down on foreigners participating in mining operations. Details next. This is Bloomberg.
Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasaja in Johannesburg. Niger has ordered 3 Chinese oil executives to leave the country over their failure to follow a provision aimed at promoting the use of local goods and services. The move is part of a broader shakeup of foreign mining companies by military regimes across West Africa to generate more revenue from natural resources. For more, let's bring in Bloomberg's Ndira Oganga, who's joining us now from Kigali. So, Ndira, what more do we know about the grounds for expulsion? As we mentioned, we've been seeing this quite a bit with a lot of these juntas across West Africa.
Hi, Jen. So there was an amendment to the 2024 Mining Code, and it stipulates that these companies and businesses must use local goods and services. Now, from the communique from the Office of the Prime Minister, it says that these companies were clearly instructed to use Nigerian subcontractors, and Chinese subcontractors cannot exceed the number of local subcontractors, and that did not happen. And for that reason, we saw a couple of executives, including one from the China National Petroleum Co., being given a 48-hour notice to exit the country. monitoring, and this company signed a $400 million deal with Niger, buying their oil in advance so that Niger can have some money and honor its debt obligation after there was a military coup in 2023. And this is not the first time that this kind of thing is happening. There has been a revocation of operating licenses for a hotel in the capital city, Niamey, on grounds of administration violation and also discrimination. And we've also seen this military regime seize a uranium mine from French company Orano SA.
What does this mean for a lot of these foreign companies operating in the region, especially when it comes to natural resources and their decades-long operations in some of these countries?
Jen, it's safe to say that the risk of operating in this region has just gone up, and they have to be very, very open to always going back to the drawing board and having conversations with these governments. Take Mali, for example. They're currently in a tussle with Barrick Gold Co. because of the Lulu mining complex that in 2023 produced 700,000 ounces of gold and also accounts for 14% of their total output. Mali wants $197 million in terms of settlement. They've also banned foreigners from small-scale mining after their output of gold dropped by 23% to 51 tons last year. So these are governments that are currently struggling with money due to the coup's economic activity is not booming. There isn't a lot of money coming from the international community because there's lack of democratically elected governments. And so they'll be looking to their natural resources to try and get a little bit more.
All right. Thanks so much. Bloomberg's Indira Oganga in Kigali for us. Indira, great to have you. Thanks so much. And the IMF and Kenya have agreed to a 9th review of their $3.6 billion program that it won't proceed. This as the international lender concludes its visit to the East African nation. It says it's now received a request for a new program. And coming up, Saudi Arabia's demand for foreign consultants slows. We cross live to the kingdom next. This is Bloomberg.
For years, Saudi Arabia has leaned on advisory firms to drive the expensive overhaul of its economy, but it seems the kingdom's insatiable appetite for foreign consultants is dimming, adding pressure on an industry already buffeted by worldwide pressures. For more, our Saudi Arabia bureau chief, Christine Burke, joins us now. Christine, good to have you with us. Well, we've seen PwC banned for a year by the PIF. Is this slowdown related, or what else is driving it?
Well, look, we can't say for sure whether the PwC ban is directly related to the slowdown that we're seeing. But what we can say for sure is that we have spoken to more than a dozen consultants in the industry, and many are viewing what happened with PwC as a warning shot of sorts to these big consulting houses that times are changing in the kingdom. So it used to be that the kingdom would bring in these major consulting houses, pay them hundreds of millions of dollars to strategize on Vision 2030 projects to diversify the economy. But based on our conversations, what we are hearing now is that that party is over. And really, it seems to be down to two key things. The first is simply Saudi Arabia's financial position. We are seeing lower oil prices that are translating into lower oil receipts. And there is still a very heavy need for spending in the kingdom. So we are seeing that the kingdom is expected to run budget deficits through 2027. So perhaps a bit of taking a step back just to gauge, how the government should be spending its money. And then the second thing is that Vision 2030, that strategy to diversify the economy away from oil, is very much now in execution phase versus strategy phase. So what sources have told us is that the government and all of these other related entities, including the Public Investment Fund, are now demanding more from these consultants. Essentially, they are looking for more return on their investment. So not only is it that the pace of contracts has been slowing, but also that the kingdom seems a bit more reluctant to pay out such top dollar without seeing a significant return on that investment.
And what are the ramifications for the other big four consultancy firms?
I mean, the ramifications here are wide-ranging. On the very face of it, for sure, it means more competition, not only between the big four consulting houses, but also with private in-house consultants and local Saudi consultants. Already, sources have told us that the PIF, for example, is starting to prefer bringing consultants in-house versus going to the big four, and is now looking more at local Saudi firms that can do similar things to what PwC, BCG, McKinsey can do, but at a fraction of the cost. The other thing, too, is we're talking talking about hundreds of millions of dollars worth of contracts here. So potentially a lot of financial risk. And we need to just mention as well that this comes in the wake of a broader global consulting slowdown. So really big ramifications here.
Bloomberg's Saudi Arabia Bureau Chief Christine Berg, thank you so much. And with that, we're wrapping up our program, Horizons Middle East and Africa. A thank you from myself and Jennifer Sabasaja in Johannesburg.